Hi, my name's Anna Serin, and I'm Director of Listings Development with the Canadian Securities Exchange, and you're joining us for another market recap. I am joined by my wonderful co-host, Bruce Campbell with StoneCastle Investment Management. Thank you for joining me, Bruce.
Oh, you're welcome. Good to be here. We're missing James, though. We really need him today.
James was on fire in our pre-show. Yeah, he totally should be joining us. It would be a different type of show, that's for sure. Okay, there's lots that happened this week. We're going to talk about the Russell Index 2000. There was a sell-off. We're going to talk about that. Asset allocation rotation. You're going to tell us about that. That sounds like a ride at the P&E. We're going to talk about some U.S. earnings and what happened there. Is Canada next as far as reporting and what that'll mean? There was an important piece of legislation that was brought forward this week in the U.S., the Cannabis Administration and Opportunity Act. We're going to tell you what that is and what that means for the cannabis space. And then we're going to talk about some CSE news. We did a 6-month reporting. It was a record performance as the CSE has seen. So lots of good numbers there we're going to tell you about. So let's start off with the Russell 2000, Bruce. Just to remind people, the Russell 2000 is an index of 2,000 companies that are typically smaller companies and mostly U.S. And it's widely regarded as a bellwether of the U.S. economy. So tell us what happened there this week.
Yeah, exactly what your definition is. So typically when most investors sort of benchmark things, they look at, kind of the S&P as the biggest 500. And then there's, a number of different indices. And one of the ones that they track is the Russell. And you really saw quite a dramatic sell-off this week. And had a lot to do with, from what we understand, hedge fund managers de-risking their portfolios. So we're going to talk a little bit about that asset allocation change in a moment. But it sort of coincides with that, in that we saw, these asset managers starting to move money away from that sector. And when they do, they're quite aggressive. And so, we saw a fairly significant drop off, as you can see from the chart, just how much it dropped off this week. In what was, a little bit more volatile week, but certainly this sector saw a lot more volatility.
Wow, that is quite the chart, huh? Well, and on that note, let's talk about asset allocation rotation. What happened there?
Yeah, that would make a good ride at the P&E, but you'd probably have to be like a PM to get on or something like that, right? Like you'd have to show you were an investor, because the kids probably just wouldn't like it. It'd be too boring for them. Well, this week, what we continue to see is that, along with, what we're seeing, say, with the Russell, we're also seeing the market move towards more of a risk-off environment. And so we've noticed that the RRG, which is the relative rotation graph of a lot of the different bond proxies, has really started to pick up. And so this is really kind of demonstrating to us that there's a bit of a mindset shift here. Investors are kind of stepping back a little bit, looking more for, what's steady and what, is going to provide stability to their portfolio, as opposed to what's going to provide high returns right now. And this kind of coincides a little bit with what we talked about several weeks ago. Now we were starting to see that relative rotation graph. We started to see some of the volatility indicators that we follow starting to pick up their volatility. And so if you look at kind of where it was, I think it was about a month ago now that we talked about the fact that we could see some enhanced volatility, and where things are now, those really have moved, and we've started to see that volatility pick up. Anytime the volatility picks up, it just becomes more difficult for investors to make money, because things are, up and down, and there's often no trend in place. And, we always talk about the fact that really separates the real strong, knowledgeable investors from the ones who, maybe are just kind of riding the coattails of a bull market.
Right. I'm always amazed at those graphs. We're going to have an episode one day where you actually show us how the graphs all work, because some of those graphs is quite amazing what information you get from them. Okay, let's talk about U.S. earnings. So there was a bunch of earnings that were reported this past week in the U.S. What happened there?
Well, we don't have a graphic for it, but what it should have been is just like a big bag of cash. Is probably what the picture should have been, because we've seen phenomenal earnings out of the U.S., and companies continue to just really build up their cash levels, is what we've seen. So we're experiencing strong earnings in the U.S., and we think that that's going to coincide over to Canada here as well, when we start reporting in probably about 3 weeks.
And That shocks me a little bit because we've just come out of complete lockdown. How is this possible?
Well, certainly, it depends on obviously the sector, and I mean, some sectors haven't done that well, but the ones that are really continue to to do quite well. And I mean, it doesn't matter where you look. It seems like demand is very strong, and in a lot of cases, supply is limited. And if that's software, if that's manufacturing, it really is across the board that the economy's trying to retool and resupply after being locked down for a period of time. Plus, you saw this huge COVID effect where people decided to buy cars and fix up their homes and spend the money that they typically had spent on travel and in a lot of cases entertainment on things that would make them more comfortable at home or for a recreational standpoint.
Yeah, and I guess Amazon and delivery services did quite well as well. I guess there was a lot of sectors that probably did quite well from what happened.
Well, I mean, you look at something like Aritzia this week. They're hitting a new high in Canada, and I mean, that's a function of people shopping online and buying something nice for themselves, right?
I bought the Aritzia stock years and years ago, and I actually did all right on it. I wish I still held it today. Okay, so let's talk about the Cannabis Administration and Opportunity Act. I'm gonna give you a little bit of information on what that is. So, Senator Schumer, who actually I believe is actually Amy Schumer's uncle. Not that that's relevant, but him and a bunch of other a group put together this act that they've put forward to the Senate. So it's being coined as the CAOA. What this is part of the act and what they're proposing is to remove cannabis as a Schedule I substance on a federal level. So just to remind everyone, at a state level, there's states in the U.S. that have made it legalized, but federally, cannabis is still illegal. So they'll remove that as a Schedule I substance. They're proposing to provide clarity on federally regulated institutions that will provide lending and banking. So that would be massive if banks could get in there and start lending to these cannabis companies, but also just their banking needs. These cannabis companies are struggling with that ability, especially the amount of cash that they go through and bring in. It could also include a pathway for publicly traded U.S. MSOs to access liquid markets, so the New York Stock Exchange and the NASDAQ. It could also allow for interstate commerce. That I found interesting because that would be massive. So state by state, they could sell and do business. So for the MSOs, that's what they've been waiting for. It could include the expungement of criminal records that, there's a lot of people in the U.S. that have gone to jail for non-violent cannabis-related crimes. And what they're saying is it'll allow, they're proposing that the FDA has ultimate regulation over the cannabis space. So that's kind of what's been put forward. Tell me what you think of this. I think this is massive. What are your thoughts?
It is massive. I mean, obviously that legislation just keeps getting pushed along. There's different levels of legislation, different acts that have been put forward, but it really kind of all gets us to the same place, which is, changing cannabis's profile from being a prohibited illegal substance to one where it's going to be regulated and be a legal substance. And this is just one more step towards that. The market itself didn't really like it too much. There was a lot of anticipation started about a week ago now that this was going to be released and that they were going to be tabling it on this past Wednesday. And the anticipation was that, it would be, I guess, stronger than it was as far as when they thought it would be passed, because once it was announced, the cannabis stocks actually sold off a little bit. So it's that, buy on rumor, sell on news type of event. That being said, we think that it's actually quite interesting, and we think that it just continues to move things along. From some of the experts that we've talked to in the US, they think that legislation could happen sometime before the midterm elections, which is still over a year away now. But, in kind of the grand scheme of things, that's when they think that this could happen. And that's really not that far away, especially considering that, it would kind of be put in place and move through the legislative process and then passed. And it could mean tremendous things for the sector.
It's huge. There's so much in there, that it'll affect things so dramatically. I mean, it's a big bill. I wonder how much success they'll have with all of that. Hopefully, maybe they've put together such a big proposal that they're hoping to get a few things through. But it'll be interesting to watch that one because that'll be a game changer, huh?
It sure will be, yeah. And
Yeah.
you'll see, you could see quite a dramatic move in cannabis market when that legislation gets closer to being passed.
Oh, absolutely. And here's a few things to think about. I mean, these MSOs, multi-state operator, they set up for this exact moment. They don't choose to be in a bunch of different regulated states just for fun. That it's all in preparation of this moment where, if states can start doing commerce in between states, that is huge. And that's when the big brands will start getting developed. And also once it's allowed to be listed on exchanges, the funds will start coming in, the institutions will start coming in, the family offices. I think it'll be huge if that goes through. We're going to move on to CSE news. We had record-breaking performance this past 6 months, and I speak on behalf of the team at the CSE. When the pandemic happened, it was really hard to tell what was going to happen to the markets. I don't know if you felt the same way, Bruce. It was hard to know what we were about to experience, and the CSE has just had an amazing year and a half, and the markets themselves have had an amazing year and a half. And it's so exciting to see so many new investors come to the table and so many companies come to the table and so many financings happen. It really is quite incredible to watch. So just to give you a few stats, we had 30.6 billion shares trade in volume the first 6 months. The value of those 30.6 billion was $24.4 billion. There was 642 financings that raised a total of 4.8 billion. Just to keep in mind, 642 financings, we only have about 680 companies. So to me, that's incredible. And we've had in the past 6 months, 99 new listings. Congratulations to our listings department. They are amazing. Every single one of them. They're so knowledgeable. I can't say enough good things about them. Mark Faulkner and Rob Terrio, who head the listings department, they've done an amazing job, and they keep building it as quickly as they can and servicing our issuers. So good on them. 99 new listings in the past 6 months.
The Gretzky.
Yeah. So, Bruce, what did you expect the markets to react like this when the pandemic hit?
Yeah, this is exactly what we thought when we were sitting there on the first week of March last year. No, it was one of those moments where, everybody had their hard helmet on and they were just bracing for the absolute worst. And then, literally the market turned on a dime, and even the returns that we saw, the recovery that we saw, the speed that we saw was just really, the word unprecedented is very, cliche, but it was very unprecedented in what happened. I don't think there's been another example where the market has dropped and recovered as quickly as it had.
And what about StoneCastle? What's happened for you at StoneCastle the past year and a half? Have you found new investors coming to the table? What have you seen? I mean, I know that you've helped support a lot of issuers, and thank you to you guys for all that support. You were one of the first guys out there who built the cannabis fund that you have, and very appreciative of that. But what did you find at StoneCastle the past year and a half?
Yeah, I mean, we've been happy, extremely happy with the way things have gone. If I said I wasn't a little nervous the first week of March last year, I would have been lying to you. And we started to see things transpire, and by kind of May, we were looking at what we saw, and we're quite optimistic. And then, as the year went on, we ended up with a record year as far as performance goes, both with our StoneCastle fund and with the other portfolios that we manage for Purpose and Spartan. And then from a fund flows perspective as well, we saw a lot of new investors who reached out to us to have money managed. So it was a great year for sure.
Well, and most importantly, Bruce, you started the market recap with Anna Serin at the Canadian Securities Exchange.
Well, that was the 2001 event. That's in itself is, it's even a bigger highlight.
Monumental.
Yeah.
Speaking of the pandemic, I do want to put a shout out to part of our team. We had our first in-person event in a year and a half. So exciting. We were in Calgary at the Stampede. My colleague, Mark Francis, puts on a breakfast every single year. And so this was the launch of back to being in person. It was a huge success and all safety was taken. But from what I hear, it was most people said it was the first time that they got to go to an event in a year and a half. So I think there was lots of happy faces and lots of good chat and networking that occurred. We also hosted esports in the capital market yesterday. Make sure that you check it out. It is on our CSE TV on YouTube. If you have not yet subscribed, make sure you do so that we can let you know when this great content comes to play. I was quite amazed at some of the stuff I learned from it. I'm still wrapping my head around the esports space. I know you and I have talked about it a bunch, but it's getting pretty big and it was quite amazing. Speaking of which, one of our issuers, Fans Unite, just oversubscribed a $25 million private placement. Some of these financings are just blowing me away. People are just so excited about it. There's Mr. James Black and my colleague Phil Shum, who were on the event yesterday. So make sure you check that out. And next week, we will be doing a panel with SciTech on psychedelics. It's never ending. So Richard Carlton will be joining us live virtually on that next week. So make sure you check that out. July 20th. Information can be found on our website. Bruce, what should we think about going into next week?
Well, the thing that we're watching for next week is a company called Royal Winds, which is listing on the CSE. Starts trading next week. It's one that we've been waiting for a while. They're in the skill-based gaming. So, if you sort of think about this is like, playing Donkey Kong for money. So they were a pretty successful company if you go back over the years, and now they're getting a listing. So we're quite excited to see that.
That's great. That's great. Thank you so much, Bruce. Have a wonderful weekend, and we'll talk to you next week.
Okay, thanks. Same to you.